WTI crude oil begins the week with a huge price gap towards the north, jumping to $81 during the early hours of Monday's Asian session, hitting its strongest levels in over 2 months after OPEC announced a surprise production cut of more than 1 million barrels a day. The oil cartel, led by Saudi Arabia, announced a total of around 1.16 million barrels a day of output cut during the weekend in a surprise move. Saudi Arabia is reducing output by 500,000 barrels per day and Iraq by 211,000. The United Arab Emirates, Kuwait, Algeria, and Oman are also making cuts. This complicates the outlook for inflation and interest rates, as investors had been betting that easing price pressures would give central banks room to pause the current tightening cycle. A dispute involving Kurdish authorities which halted exports of around 400,000 barrels a day from the Ceyhan port in Turkey also tightened the market since last week and seemed unlikely to be resolved anytime soon. The move by OPEC appeared to be an attempt to keep the oil price above $80 a barrel in the medium term, given that demand could be hit by a weakening global economy and sanctions have had a limited impact on restricting Russian oil supplies. Meanwhile, the U.S. reaction to OPEC is not welcomed, and hence more strategic petroleum reserve releases are likely on the way, suggesting a pullback in the oil price.